So we heard from the previous presenters and also the panelists regarding the future of blockchain in Africa. So when you hear the buzzword blockchain, immediately what is coming to your mind is cryptocurrency, is Bitcoin. But in really sense, blockchain has a lot of use aside what we know as blockchain. So today we're gonna navigate through DeFi, which is decentralized finance, and understand a bit on innovations in this area and what made it to appear as a decentralized finance. So when you hear the word finance, what comes to your mind are either lending, borrowing, saving, trading, or other financial activity. So we have lived in a global where every time, everything we do is centralized. We have banks which managing our money. We have governments which manage our KYC. It manages like everything. So people, they feel like whatever is being governed is not enough, then they find a possible way out, which is decentralization. So when we are talking about centralized finance, we are talking about banks managing money, opening account, being able to validate if you are eligible to get the loan or any facility, if you have enough liquidations, for them to give you a loan. So this is centralized. So from KYC, you need to provide your data, your details to the banks. You need to provide your information to financial institutions. And apart from that, in real sense doesn't guarantee that you get facility. You need to put your money as collateral so that you can take a loan or something like that. But what DeFi brings now is decentralization. That you don't need a bank, a financial institution, or a broker for you to do business or to do transactions. So we're talking about being able to lend money without depending on the bank. Even if you don't have qualification to get a loan, for example, you don't have collateral, you don't have a big business for you to get a loan, you can be able to get a loan through the DeFi. So how does it work? As previous says, is through the blockchain. What is blockchain? Is it a block in the chain or the chain in the block? Previous speakers, they mentioned that blockchain is basically a tool where people, they can transfer money, they can do business. There will be like smart contracts and everything. Can you put the next slide, please? So the DeFi, what is bringing is permissionless. You don't need permission from any central organization or central entity for you to do your transactions. So what does it mean is, within the blockchain, which is a decentralization infrastructure, you have a network of computers. As long as you have a computer, you can be able to get your wallet, your digital wallet. So by having a digital wallet, you can be able to open, let's say, a crypto wallet for you to have either stablecoin or cryptocurrency. Now, once you have the cryptocurrency within the same blockchain, you can be able to save that crypto in a pool so that somebody else can be able to borrow that money from the pool. So you are not the one who will be able to give a loan to a person. Rather, there will be like a pool where you need to put your crypto on that. So for example, if you have, let's say, Bitcoin, or Ethereum, for example. So you are taking Ethereum from your wallet and you put it in the pool. For you to be eligible to get a loan, you need to have as much as possible than what you need to borrow. That being said, we have programmable contracts, which we call them smart contract. These are executable codes. You don't need an organization or a bank to determine if you need to get the loan or when do you need to pay a loan. So what we will have is a smart contract. It's a programmable code which states simply that you lend this amount and you'll be able to pay this date. And if your collateral, which is like money, which is the cryptocurrency you're putting in, will depreciate, then they will be able to liquidate that fund and you will be able to get what remains as a balance. So how does it work? For example, a person A has a linked wallet and he has like Ethereum, which is equivalent to 100,000 USD, but you need to take a loan of 500 USD. So what will happen is you won't be eligible because 500 USD is a bit higher than 100 USD. So you need to put like maybe 1 million USD as cryptocurrency for you to get like 500,000 USD. So the amount that you need to borrow has to be a bit lower than what you put as a collateral. So that is what is working on. When we are talking about decentralization, is like there is not an entity, as I mentioned, and trustless, like you don't need to trust a middleman. Like what is happening now is you can be able to get a loan from one bank, and also you can be able to bring evidence that you have this money to bank B, so that bank A can be able to lend money for you. Saying that, it's like you are bringing somebody as a trustee to mention that you have this amount on their bank so that the other bank can be able to lend to you. Transparent, we are talking about blockchain. The basis for blockchain is transparent. A transaction which is happening can be seen by everybody within the blockchain. And also, I mentioned also the programmable and censorship resistance is like you don't need somebody to censorship for you. The next slide, please. Okay. So when we are talking about blockchain, we are talking about Web3. And when we are talking about Web3, there have been development into usability of internet and website. Of course, if you remember, we had Web 1.0. This is when we were reading American online newspapers. You just open your website and read whatever you see there. There is no any interaction. You cannot edit. You cannot put a comment. Then comes Web 2.0, which is basically the social media past. Everybody can be able to create a content, can be able to post, can be able to comment. Now, we have Web 3.0, which is basically intended to allow machine-to-machine communication. Like there is no need for a person to know what to buy. So your machine can be able to execute a program and see online what is your favorite, then it is buying. This is what we are using, they are using on Netflix now. You can open your Netflix and you can see movies which they are related to you, which you like to see. So this is Web 3.3. But we have another version of web, which is Web 3. This is a bit different from Web 3.0. Now, on Web 3 is where the decentralization is happening. They don't want machine to talk to machine. They want you to be able to manage yourself. There is no need to have something in between. So we have this vision of Web3 libraries which are making possible for DeFi to work. Apart from that, I mentioned the wallet integration, whereby you can be able to have a wallet of these. Let's say you have the MetaMask digital wallet, then you can be able to transact with a Trust wallet. So there is an integration between wallets. And also we have blockchain platforms. There are different blockchain platforms available at the moment. Of course, we have Ethereum, Binance, etc. So these also are part of technologies which are allowing DeFi to work. We have smart contracts, which I mentioned, as well as the platform for DX, which is decentralization exchange protocols. You can have application like Uniswap or SushiSwap to allow you to exchange cryptos or cryptocurrencies. Of course, you can have Bitcoin, then you can be able to swap to different cryptocurrencies, or you can swap them with stable currency. When I'm talking about stable currency, I'm talking about the cryptocurrency which is equivalent to fiat currency. For example, you can have cryptocurrency which is exactly mirroring the exactly USD currency. So these are part of technology which are used to enable the DeFi to work. So the next, okay. Now, people are utilizing DeFi in different areas. As I mentioned there, people, they can be able to to do lending and borrowing. People, they can be able to use real assets and tokenization. When I'm talking about tokenization, I mean, of course, you can have a land, you can have an asset, then you can be able to do tokenization, like to digitalize it, and be able to sell part of that land. Now, this is happening a lot on trading, whereby, for example, you have a building, but you need to sell it to different people. By using blockchain, you can do asset tokenization to that particular building. What is happening is, for example, the building is costing you to build like, let's say, 1 million USD. Now, you can create, you can convert it to digital building. Then instead of put a specific amount like 1 million USD on that building, you can create a different token with 100,000 USD. So you have like 10 tokens for the same building. A person who doesn't have 1 million USD can procure one token with 100 USD and be part of, be partial owner of that building. So this allows people who even are not millionaires or billionaires to own part of that building. So this is happening now on real estates by using the asset tokenization. We have also decentralized autonomous organization, which we call them DAOs. And in this area, what is happening is you don't need like a central authority to decide what is happening within your blockchain. So what is happening is you need to have like a certain mandate within you to agree that whatever the action you want to take within the blockchain, there must be like a quorum of some level of some numbers between you. For example, if you are 10, then you put a smart contract that until the quorum is 7 out of 10, then the thing has to be executed. So this is happening right now on Ethereum. So whenever they want to upgrade or do anything, they have to use the decentralized authority to decide what is happening. And on stablecoin, everybody, I think they are aware of it. It's like, exactly mirroring of the available fiat currencies. For example, we have USD stablecoins. Nigeria, they have Naira, which is in pilot right now. And other countries, especially in European Union, they are trying to bring their stable coins. In Tanzania, I think we are still reviewing that. Then we have yield farming and the liquidity provision, where you can be able to put your money into a saving or a pool. Then if somebody is taking a loan using that money, you get an interest out of it. So this is what is happening right now when you put your money into the bank and then you earn interest. Then we have asset management and index funding. We have insurance. We have decentralized identity, which we spoke yesterday regarding the SSI in digital identity. There will be cross-border payments. Here is where we will have swift, speedy transaction, and it will take a few days for you to, a minute for you to transfer, rather than what is happening right now. You're taking like 2 days for you to get the value for what you are sending. Of course, we'll have the prediction markets and blockchain gaming and NFTs. In NFTs is whereby you can have like digital art, then you can be able to sell it in digital market by using blockchain. So these are the applications within the DeFi which are working right now. Some people they are practicing them right now, especially on NFTs. I think you had some person can do an action and digitalize it and sell it in the market through the blockchain. A slide, please. So these are what I just mentioned, some of the benefit on DeFi and the difference between traditional finance and DeFi. You can see that there is a bit different on oversight, whereby government is in control in traditional finance, while we are using smart contracts and rules, and as well as protocols as oversight mechanism in decentralization finance. We have also transfer of money, which takes seconds or minutes in DeFi, when here on other part, days or weeks. Of course, there is access to investment, whereby it's open for all as long as you have digital wallet in this part. While here you need to be eligible to get the loan. We have saving accounts APYs, which is 3% more in these areas, where here is less than 0.2. Of course, we have secondary market, which I mentioned, Uniswap and others in these areas, while in traditional finance, we have big companies like New York Stock Exchange. Of course, here we have the Salaam Stock Exchange, etc. So, there is a lot of opportunities within the DeFi. As we can see that there is financial inclusion. A person who was not eligible in the traditional finance can be eligible in DeFi. Also, there is micro-lending. You don't need to lend a huge amount of money. For example, sometimes when you go to the banks, there is a limit. You can just go there and lend like 100,000. You need to have like amount which can make sense for the bank to get interest. So even people from the farm, they can be able to learn once they utilize the DeFi. We have creator economy. A person who is a designer, a person who is an artist can be able to create an art and convert it into NFT and be able to sell it to the market. Also, we have community-owned finance, DAOs, where decisions are made by you, not the central entity. Of course, everything comes with its own risk. We can see that smart contracts are digital program codes, so somebody can be able to create bugs on it. It happens right now. Also, there is a chance of, before the smart contract being executed, somebody can inject another code within it. So sometimes that is the risk. We have regulatory uncertainties. As of now, a lot of countries, there is no certainty regarding the regulations on blockchain itself, cryptocurrency, as well as the decentralized finance. And also high fees and scalability and complexity for users. On high fees, we're talking about gas fees, on possibly on cross-chain. When I'm talking about cross-chain, I'm talking about being able to do transaction from one blockchain to another. So that is also a challenge, and the complexity for users. Like, not everybody knows what blockchain is. So most of them, they think like this is only for Bitcoin. So a lot of education should be applied to these areas for people, even in rural areas, to understand what blockchain is. Yes, please. What will happen later? What is the focus on later? What will happen? It is predicted that we'll have what we call CDFI. CDFI is hybrid mode, whereby central finance will be able to merge with decentralized finance to work. Because at the end of the day, you also depend on a certain level of governance for everything to work. Also, it is predicted that institutional DeFi will be adopted within the areas, whereby now some institutions will have some kind of local DeFi, which will be able to penetrate much on areas where there is no financial inclusion at the moment. Of course, regulations will lose a bit to allow DeFi to work. So governments will be able to find a way that they can be able to regulate the DeFi for them to work. This is specifically when we are talking about issuing the license for some of fintechs to be able to work on DeFi. And also the CBDC integration, which is central bank digital currency. Of course, central bank they are reviewing right now, and other central banks they have already put them into pilot. For example, Nigeria, they have their own digital currency, which is on pilot right now. And other countries, they have already a central bank digital currency, and they're working right now. So the integration will be massive across countries, for that matter. So this is it. If there is any question.
Thank you. Yuri from Solid Wallet. We're the first wallet for feature phones, a crypto wallet for feature phones. We support mostly stablecoins across Africa. I had a question with API. I think that's a really important topic. You mentioned that there's 3% API with DeFi. Maybe you could speak more on that, because I think it's good to share why these stablecoins are so important when it comes to lending and borrowing. Thank you.
Okay, thank you. So what happened when people heard about Bitcoin? When they hear about Bitcoin that time, it was like, this is illegal currency. Why? Because it's something that is decentralized, it's not manageable, it's not governed. So people were like, okay, why should I have something which is illegal? And of course, most of part of the world, it was used for black markets, etc. So people, they were worried, like, okay, fine. If it's not illegal, then I cannot associate with it. Of course, recently, you heard that the value for Bitcoin was more than 100,000 USD. Now people, they said, okay, this is huge, let me associate with it. But at the end of the day, the decentralization means it's not governed, etc. But also, when you have like one Bitcoin one day, the next is 1,000 USD. It's not stable, it's volatile. You cannot have something that today is this much, tomorrow this much, then it's back. And most of other cryptocurrencies, they are not existing no more because of volatility within the market, because it's not governed. So it depends on what value are you putting on your cryptocurrency at that time. So because of this, people, most of them, they were not associated with the Bitcoin or cryptocurrency for that matter. But to resolve the issue of volatility, then came the stablecoin, which is the cryptocurrency which is stable and it's not affected by volatility within the market. So how does it work? The stablecoin is being built within the blockchain, but it has the value of that exactly country currency. For example, the USD stablecoin, it has the value of the USD dollar. So what is happening is, you have a blockchain, which is layer 1. Again, you have layer 2, which is the middle ground between the outside world and the blockchain. Why do you have layer 2? Layer 2 is like Oracle. It serves to update the exact value of USD in the real world to the blockchain. So whenever there is a change of USD value in the real world, the Oracle will assist to match the same with what is within the blockchain. So that is how stablecoin works. So at the end of the day, once you have a certain stablecoin, it will really carry the real value of that particular currency in the real world. I don't know if I answered correctly. So these stablecoins are now used within the blockchain like real money. So people, they don't worry that someday they will wake up like there is no cryptocurrency no more, because of what the trustee being kept in the real world. Thank you.
And buy something maybe from Europe without needing technology like MasterCard or Visa.
Correct. You can do that. And that is exactly what cryptocurrency is coming to resolve. But the person who you're buying to, the merchant, need to have either similar Bitcoin wallet so that you can be able to pay him. Because if you have a Bitcoin now, okay, on your wallet, you can only take that to somebody else's wallet who is also using Bitcoin. That's number one. Number two, like what is happening right now, you have TZS, you want to buy something in dollar, you need to exchange it first, right? So that is also happening on the exchange, which is the decentralized exchange. So you need to exchange that. Maybe you have Ethereum, you need to procure using the Bitcoin. So you have to convert first using this exchange in the wallets. Of course, that may be possible if you have cross-chain, where there is a middle between blockchain for Bitcoin and blockchain for Ethereum.
We take the last one from you, right?
Yeah, thank you for a good presentation. I have seen a lot of development around the blockchain technology. Want to ask a question about the tokenization part. You have said that it is applicable around the world, which is true, but in Tanzania, is it widely used, and is it backed by regulation, or we are still lagging behind in that area of real estate and tokenization? Thank you. Okay, so it has been adopted within different areas, different countries, but not all they are in the same stage. Some they are reviewing it in R&D, like research and reviewing it if it's applicable, and other they are in implementation stage, and the other they have implemented, but it's on the pilot, and the other they have fully implemented and they are using it. So there is a different level. Now in Tanzania, you know this is blockchain. When you're talking about blockchain, you're talking like this is global. Okay? It's decentralized. So somebody here in this room, he can have that application. He can have a wallet and he can be able to buy a certain portion of building. And some of people here, they have that, okay? But in terms of regulation, no, it's still being reviewed. Because when you're talking about blockchain, when you're talking about decentralization, you're talking about not involving the government, okay? So that itself is an alert and alarm to the government. Why this guy doesn't want to include the government in this? So even the government, for example, as we are speaking right now, Central Bank of Tanzania doesn't allow the exchange of cryptocurrency. Okay? They are still reviewing it. They have, the Central Bank of Tanzania, they have given the platform, like Sandbox, for fintech to review or to work on decentralized applications, but mainly for maybe stablecoin or usable of blockchain in other applications. For example, the usage of a smart contract in supply chain and management to ensure that you can be able to mark or trace the let's say the diamonds. If the diamond has been mined in let's say Shinyanga, for example, immediately when it's been mined, you register it into the smart contract to track it. Even when it reaches to the market, you know that this diamond is coming from Shinyanga and not a bloody diamond. So that there is a sandbox for people to work around, but it's not yet for cryptocurrency. No, it's not yet. There is no law which allows cryptocurrency to work currently.
All right. So